Hi, just a quick little introduction, just basic information, who I am, the company which I represent, as well as basic risk disclaimers and so on and so forth. And also I'm going to explain what the Forex market is, but I really want to get very heavily involved into the strategies because this is a trade-a-thon and there's some really, really great setups inside the Forex market that I think you should be all aware of. So you're about to discover the London breakout strategy. Inside the London breakout strategy, you're going to session and learn how to utilize the trade setups inside the European session. I'm your host, Joshua Martinez, your Forex authority. Now, like I said, there is risk involved in trading the Forex market. Just understand that there's no such thing as 100% absolutes or guarantees, but there is high winning percentage trading, and there is low winning percentage trading and high losing percentage trading. So therefore, we do ask that you trade responsibly. We will be looking at setups and trading opportunities and strategies in which you can apply either tonight, tomorrow, the next day, and so on. So we ask that you only risk funds to whereas if you are to lose them, it will not affect your everyday lifestyle. For example, don't risk your grocery money. Don't trade money that you plan on utilizing for your mortgage, car payment, or even your kids' college tuition. And so I just have a couple of questions. How many of you in this room would like for me to share with you a time-tested way of trading that may even help you generate profits today? And how many of you would like for me to share with you a done-for-you blueprint that has allowed thousands of Forex investors just like yourself find success in the Forex market? And how many of you would like for me to share with you how you can begin to develop some sort of supplemental income, and then if you become really good at it, you can eventually replace your income as a Forex investor? Well, great, because we're going to do that today on inside of the Forex market. So the question is, what is the Forex market? Well, the Forex market is the largest financial market with almost limitless amounts of liquidity, which really means it is a market of limitless financial opportunity. To me, the Forex market is the safest, most predictable, and easy investment that I've ever seen. If you take a look at this graph from sumoforex.com information, you have the average daily trading volume, and on the left-hand side, you have the Forex. About $5 trillion just traded back and forth in a single day. Then you have the New York Stock Exchange that has about 22.4 billion, the Tokyo Stock Exchange that has about 18.9 billion, and the London Stock Exchange has about 7.2 billion. If you were to add up the other world stock exchanges up, everything that's traded back and forth, and then you compared it against the Forex, it would not even equal to 1% of what the Forex market has to offer. So, because of that, some of the world top investors like Warren Buffett and George Soros begin to invest in the Forex market. Now, here at MTI, we strongly believe in modeling. They're not the kind that walk down the runway, but those that learn from others. And if the top investors in the entire world are trading the Forex market, don't you think we should too? Another key reason I love to trade the Forex market is the fact that it's open 24 hours a day, 5.5 days a week. Just by a show of response, can you go ahead and just type into me if you work a day job, just a 9-to-5er? The only reason why I asked that question is because if you work a day job or a 9-to-5er, it can be pretty difficult for you to invest in any other world market because usually while you're at work is the hours that the other world markets are open. Well, if you traded the Forex, it was open 24 hours a day, 5.5 days a week. What if you have the ability to trade before your day job or even after your day job? And then you could work building on some sort of supplemental income, and then eventually you could replace your entire income. For those of you that know who I am, I'd like to go ahead and say thank you for giving me the opportunity to speak with you once again. But for those of you who are listening to me for the first time, let me have the opportunity to introduce who I am. I am Market Traders Institute's product expert, and I have trained thousands of Forex investors. I have turned an initial deposit investment of $500 and solely trading the Forex market I've generated over $39,000 of profit. I've made thousands of Forex investments. I'm a published author, international speaker, professional analyst, and a full-time trader. And what I'd like to do is share with you my journey before we jump into the live market to kindly give you the opportunity to see what the Forex market has to offer. See, back on June 5th, 2011, I opened up a trading account with $500. A lot of it was because I was skeptical of the Forex market. Probably a lot of you in this room are feeling the same way. See, I heard of the great opportunity the Forex has to offer, but I didn't personally experience myself. So I opened up a trading account. When I first started investing, I was making like $3 to $5 per trade. When I lost trades, I lost like $4 to $6 per trade. I wasn't really making a ton of money, but I also wasn't really losing a ton of money either. But I decided to educate myself. Like many of you in this room, who's taking action and educating yourself from some of these world-class investors that you're learning here today. And that's a special thank you to TradingPub. Well, about a year and a half after learning to trade the Forex market through Market Traders Institute, I was able to see returns of $4,560 US a trade, $2,542 a trade, withdrawing around $10,000 at a time. Now, before I was a Forex trader, I was a personal trainer. Worked in the gym industry, and I taught people how to lift weights. It used to take me 6 months as a personal trainer to make $10,000. Now, in the Forex, I have days where I make upwards of $7,598 US. The neat thing about these results that you're seeing is they are third-party verified. I brought my trading account to myfxbook.com, where tens of thousands of Forex investors, just like yourself, bring their accounts to be verified. Track records verified, trading privileges are verified. Trading account, we have a 4,548.82% return on initial deposit investment. Matter of fact, the other month, we generated over $8,800 US in one single morning. Now, with that being said, I'm going to go ahead and show you exactly how we've been able to do this inside the Forex market. Hopefully, you can pick up some really nice tricks and tips and get you on the road to financial success. For those of you who are trading the Forex market, I want to go ahead and say thank you so much for giving me the opportunity to speak to you about the Forex market. For those of you who have not, thank you so much for giving me the opportunity to show it to you for the first time. This is what's called a Japanese candlestick chart, and these are just bars of memory which measure price interest points over time. Here in the Forex market, we buy and sell pips, and a pip has the same relationship to a penny as a penny does to a US dollar. So, for example, there are 100 pennies for every $1 US. Well, in the Forex market, there are 100 pips for every 1 US penny. So we are literally buying and selling fractions of pips or fractions of pennies inside the Forex market. But the value of your pip is measured at a much greater value than just a fraction of a penny. Let me kindly give you an idea. Today, example, we're going to go ahead and discuss and talk about a 2,000 US dollar investment per trade. This is known as a standard lot investment inside of the Forex market. When you invest 2,000 US dollars in the United States, it's called a standard position. For every 1 pip of movement, it is valued to around 10 US dollars. So if you make 10 pips, you just made 100 US dollars. If you lose 10 pips, you just lost 100 US dollars in real time. Your 2,000 US dollar investment per trade is not your risk. That is just your investment. You always get your investment back. Your risk is either in pips and your reward is in pips. Now, the strategy that I'm about to show you and the techniques that I'm about to show you has an overall goal and history of allowing students and individuals to generate around 500 pips a month. Well, if you trade a standard position, that's around 5,000 US dollars a month. And really what you have to ask yourself is this question. If I can show you something that can generate around 5,000 US dollars a month, month after month after month, for the rest of your life with only a 2,000 US dollar investment, is it worth learning and taking about the next hour of your time? Perfect. So what I want to do is go ahead and get started. And we're looking at the Great British Pound JPY 1 hour time frame, where every candlestick represents 1 hour, and you have dark candlesticks which measure downward movement, and you have white candlesticks which measure upward movement. Well, the neat thing about the Forex market is it really does the same things over and over and over again. It has what's called pattern recognition. And when the market decides to rally or go up, the market's going to make higher highs and higher lows, higher highs and higher lows. And when the market decides to go down, it's going to make lower lows and lower highs, lower lows and lower highs. This is the basic concept of the Forex market. Nothing too crazy, nothing too dangerous about it. right away, if we were randomly just to come check in on this, more than likely it looks as if this market's going to form a high lower than this high, and then we should expect the market to fall once again. So what I want to do is teach you a secret, and this secret is actually pretty neat. What it does is it allows you to identify on a daily basis and high winning percentage opportunities the high of the day and the low of the day. Oh, it looks as if I accidentally muted myself. Anyways, for those of you that have pens and sheets of paper, please be so kind to bring them out. This is what I would like for you to write down. This is going to be your takeaway from my presentation today. There's a high or a low of the day, or there's going to be the high/low. And please be so kind just to type in a Y or yes. Just want to see how many people are interacting or watching this. If you would agree within a 24-hour period, the market's going to form a low of the day and a high of the day. Thank you, Colin. Thank you, Tim, Steve. Just kind of trying to gauge how many individuals are actually watching the presentation. Gus, L, SB, Wayne. Okay, perfect. Well, that's our goal. And what's neat about this is with the Great British Pound crossovers between 2 a.m. Eastern Time and 5 a.m. Eastern Time, the market should form its first high or low of the day. The opposite high or low of the day forms between 8 a.m. Eastern Time and 2 p.m. Eastern Time. As you can see right away, there is a greater gap between the opposite high or low of the day than there is at the first high or low of the day. I'm going to go ahead and prove this point by actually back testing and showing you and highlighting the highs and lows of the day and the times. But as you can see, there's a much smaller gap between 2 a.m. and 5 a.m. And here's the deal. If you can become really efficient and identify the first high or low, trading can become very straightforward and very simple. I would suggest that you write this down. You're going to want this as your takeaway. To prove that point, we're going to go ahead and I'm going to highlight the highs and lows that I find, and all I want you to do is ask yourself, are the candlesticks increasing, which means they're becoming larger, and from there I'll show you an actual strategy. Okay, what I just did is I highlighted this candlestick, and this candlestick, this is my box information. It shows the date, the time, the open price, the high price, low price, close price, and tick volume. So I want to ask this question. At 2 a.m. Eastern Time, did the market pick up and increase its volume and make a decisional directional move towards the south? Yes or no? Okay, that was the 10th. Let's look at the 9th. The 9th, 7-9, the day before yesterday, at 5 a.m. Eastern Time, did the market form a low of the day and rally towards the north? Of the previous day, which would be the 8th, let's go ahead and take a look. At 3 a.m. Eastern Time, did this market form the high either of the morning or of the day and make a decisional move towards the south? Yes or no? These are all done off the 1 hour time frame. Let's take a look at the previous day. Now, this is something that will give you a huge competitive edge as a Forex investor if utilized correctly. Would you agree that on July 4th, which was a Friday, the market increased its candlesticks, broke out of the consolidation level, and decided to fall down towards the south, starting at 2 a.m.? And then the previous day, at 4 a.m. Eastern Time, it formed the high of the morning and then fell down towards the south. Let's keep going. Look what happened July the 2nd at 2 a.m. Eastern Time. The market formed the low of the day and rallied towards the north. Let's keep going. Let's see July 1st. July 1st, 2 a.m. Eastern Time, the market formed the low of the day and rallied towards the north. Now, these moves aren't small moves. Let me kindly give you an idea. From this low to the initial high that took 5 hours, that was 75 pips. 75 pips is equivalent to 750 US dollars trading a standard position. On this scenario, from the low to the high, this was 76 pips. 76 pips is equal to 760 US dollars. What if you could capture a fraction of this and you were able to generate an extra 500 US dollars a day? Heck, what if you could make an extra $400 in just 4 hours of trading? Would that be something you'd want to learn how to do? Okay, let's keep going. Okay, here is June 30th. At 5 a.m. Eastern Time, the market was associated with the low of the day. Look how it rallied. And from this low to the first push, it only took 8 hours. This is 86 pips. And this is this last week, which is additional 860 US dollars trading a standard position. So the big question is this: how in the world do we take advantage of this? How can you take advantage of the high, and how can you take advantage of the low of the day? Well, one of the things you have to understand is the following. Number one, hopefully you're beginning to buy into the concept that around 2 a.m. and 5 a.m. Eastern Time, the first high or low will form. I'll show this to you on a couple other currency pairs as well. The second thing that I need you to buy into for you to utilize this strategy is simple. The distance between the low and the high of the day has what's called the average daily trading range, or ADT, average daily trading range. And when it comes to the Great British Pounds, as of right now, volume's kind of low. It's because of the summer months. It's right around 100 pips. And because it's around 100 pips, the goal is to make around 50 pips per day per currency pair. To kindly give you an idea, that will be the equivalent of generating 500 US dollars a day. Just by a show of response, how many of you in this room will be pretty pleased generating around 500 US dollars a day? Day after day after day after day after day. Maybe not every day, but most of the days. Let me show you a simple strategy that can allow you to potentially capture this. And then I'm going to show you overall direction to help you predict the overall breakout. Because at the end of the day, if you can't predict the breakout, this can be really tough for you. Okay, so let's make this simple. Anyone want to try to, what time does Europe open? Go ahead and type in the chat box. What time does Europe open? Okay, Steve says 2 a.m. Chris says 2 a.m. Alice says 3 a.m. Chris says 2 a.m. Well, Europe begins to open up at 2 a.m., but London opens up at 3 a.m. When London opens up at 3 a.m., what typically takes place with the Bank of England? Remember, 3 a.m. Eastern Time is London's open time. What begins to take place with London? Transactions, not just little transactions, but big transactions. Let me explain. Let me explain to you how we explain to our students here at MTI. Let's just say here in the United States, let's just say I own a car dealership. And let's just say I actually own like 100 car dealerships because I'm a big player. And I need to order new cars. And I'm an exotic car dealership, so I can't just buy my cars here in the United States. I actually had to go buy them offshore. And so wherever I want to go, let's just say I want to buy cars from Great Britain. Okay. Well, what I'm going to do is I'm going to place about a $500 million exchange order to exchange US dollars into another currency pair because, hey, that's just, I can't just buy everything in US dollars. It doesn't work that way. So Not my local bank can't just accept it. My local bank here, down the street, they're not going to take $500 million from me and then go ahead and exchange it. What they're going to do is they'll begin to accept it and pass me off to another bank who may pass me off to another bank who may pass me off to several banks to spread the risk or whatever. But majority of those large exchanges go to Bank of England, believe it or not, over in Europe. And what ends up happening is all these orders get backed up because of the exchange, because of the time zones. And when Bank of England opens up, they process these transactions. And when they process these transactions, money is moving. And that's why between 2 a.m. and 5 a.m. Eastern Time, you see these big moves over in Europe because the exchange of money. Does that make sense? Type in a Y or yes if that begins to make sense. That means the majority of European crossovers begin to move during that time. So what do? We take advantage of that. And we take advantage of it very well. And I'm going to teach you a simple strategy, and then we're going to apply it in other currency pairs as well. You may want to write this down. Now, this has everything to do with the 3 a.m. Eastern Time candlestick and a 1 hour time frame with any Great British Pound crossover. Now, I can teach you the highest winning percentage crossovers. That's quite all right. But let me just go ahead and show you how this works. Okay, so there's what's called a blind straddle, and then there's what's called a educated straddle. I'm going to teach you both. A blind straddle is when you come in and the close of the 3 a.m. candlestick, which means it's 4 a.m. Eastern Time, you're going to look at the high or the low of the day. Of the 3 a.m. candlestick. And what you're going to do is you're going to place what's called an entry buy order 5 pips above the 3 a.m. candlestick, high. So this is 94, so 99. 173.99. 173.99 will be the entry buy. Now, a entry buy is not it's not a market order. You're not physically in the market. What you're basically saying is, I am making it a requirement that the market crosses over this price point, and then it will trigger a buy. 10 pips above, not 5 pips. The high will be 94, so it will be 0.4, and it will be plus, it'll be simple if I just do this, plus 10 pips above entry buy. Write this down. You're going to want to use it and test it. Below this high, or below the 3 a.m. low, you're going to place a entry sell 5 pips below, 79.74. So minus 5 pips below is entry sell. Yana, can you please be so kind just to type in the chat box what time do you expect me to be done or want me to be done? This way I can kindly gauge. I have an idea, but I don't want to assume either. Okay, so type in a yes when you have 10 pips above, negative 5 pips below. Perfect. Okay, so does anybody want to try to guess why it's 10 pips above and 5 pips below? Does anybody want to try to guess that? There's what's called the bid and ask price. Let me go ahead. The bid and ask price is if you want to sell the market, you enter in on the bid price. If you want to buy the market, enter in on the buy price. We're looking at bid charts, so we are only looking at sell prices. The buy price is, you can look at another chart, but that's why when you look at your broker platform, you have the sell side and the buy side. The distance between the bid and the ask price, the distance between the bid and the ask price is called the spread. That's what you pay your broker. Okay, so now this is done. What we're going to wait for is we're going to wait for this market to trigger us an entry. Bingo. Did this market cross over this green line? Yes, it did. And this green line represents an automatic entry. So this now becomes a market sell. So you're physically in the market selling. Now, the first thing you need to do is cancel your opposite order. You got to get that buy order out of the way. You got to get rid of it. When you get rid of it, because you do not want a floating order. The second thing you need to do is set your stop. Stop's really simple, plus 5 pips above the 3 a.m. high. 94.99, 173.99 plus 5 pips above is the stop. Limit is 50 pips away. 173.24, 173.24 plus 50 pip reward. Okay, here's the risk. The risk is 24 pips. Risk, 24 pips. Trading a standard position, your risk would be $240 on this trade. Your reward would be $500 in this trade. Who would take this trade? Who would be able to risk $240 to make $500 in this trade? It's a nice 2-to-1. It gives you a competitive edge. Matter of fact, you should be able to lose. You should be able to only win 4 out of 10 of these trades and still make money. And that gives you a huge competitive edge because equity management at the end of the day ultimately separates the winners versus the losers in this market. Be it as it may, here's the deal. Every candlestick represents 1 hour of trading. Let's see how many hours it takes to limit us out. We're already 1 hour in. 2, 3, 4, 5. 5 hours, we just made $500. How many of you would be pretty happy generating $500 US in 5 hours this morning alone? And this is a 1 hour time frame, Sherry. Okay, so that's this trade. Let's take a look at another day. Okay, really simple, really neat stuff. Let me give you examples. 3 a.m., beautiful. Look at this on the 8th. You're going to love this. Okay, please be so kind just to confirm that the candlestick that I highlighted is July 8th, 3 a.m. Eastern Time, and this is highlighted. So remember, this is your takeaway. For those of you in this room, how many pips above this 3 a.m. high am I going to look to buy? This is your takeaway. Steve, perfect. Kishore, perfect. Mel, perfect. 10 pips above, we're going to look to buy. The high is 74.52, 74.62 plus 10 pips above will be my entry buy. Now remember, an entry buy means you're making it a requirement for the market to cross over this price point. And it's going to be the ask price or the buy price that touches this, not the bid price. Okay, how many pips below the 3 a.m. candlestick low are we going to look to sell? Kishore, perfect. Steve, fantastic. Nope, Steve, 5 pips below, not plus 5 pips. Chris, perfect. Now, this low is 52. Oh, excuse me, this low is 31, so it'll be 36. Negative 5 pips below, entry, sell. Okay. There's nothing to do other than wait. Now, when you have a really good day, when you have a good day of trading this, your first hour you should be entered into the market. I love this because for those of you that are tired, and usually it takes less than 30 minutes, you're in the market, you set your stop, you set your limit, go back to bed, make all your money and lose all your money while you're sleeping. And I think a lot of you, that is right up your alley because you know, if you have an emotional problem where you mess with your trades, this could be perfect for you. Okay, did this market cross over our entry sell, making this the official market sell? Beautiful. What's the very next thing that we need to do? Yes, Carl, we're looking at the Great British Pound JPY 1 hour time frame, but this works literally on any other Great British Pound crossover. Okay, the very first thing we need to do is cancel the opposite order. Then what do we need to do? Immediately, what do we need to do? We just cancel the order because you don't want a floating order. Stop. How many pips above stop over a 3 a.m. candlestick? How many pips? 5 pips above. Beautiful. 52, 57, plus 5 pips. Plus 5 pips above is our stop. Okay, how many pips away is our limit? How many pips away is our limit? What's our reward? Steve, Ed, Kishore, Chris, lovely. Esley, 50 pips away. Okay, 173.76. 173.76. Everyone who answered all the questions, you're now dubbed and have the ability to do this tomorrow. That's it. You're now qualified to do this tomorrow. All right, let's see what the risk is. 32 pips risk. Risk, 32 pips. How many of you in this room would be willing to risk 32 pips to make 50 pips? Or would you be willing to risk $320 to make $500? Chris says yes. Kishore says me. Colin says yes. Steve says yes. Pete says yes. Oops, not Pete. Kishore P. Rock says no. That's fine because hey, it could not be worth your equity management. Sydney says yes. This is like 1 to 1.5. Okay, every candlestick represents 1 hour of trading. We're 1, 2, 3, 4, 5, 6, 7. 7 hours later, you just made 50 pips. How many of you be pretty happy making 500 US dollars in 7 hours? Lovely. Okay. So I think everyone begins to get the understanding of this. This is basically the blind straddle. This is the blind technique of saying, hey, look, I'm just going to expect this market to just pay me out, right? You really do not have a biased opinion. Sometimes when you just do this, the market will spike one direction and then it'll stop you out in the opposite direction. That will happen. And before I show you the technical way of doing this, where you have a directional breakout, everybody needs to have what's called a profit plan. If you do not have a profit plan, basically you're driving blind. And that's just the reality of trading, because success is a formula, not a fantasy. You can't just turn on your charts and turn on your broker platform and say, I'm just going to make as much money as I possibly can today. Life doesn't work that way. Business doesn't work that way. Neither does trading. You may get lucky. You may make money consistently doing that. But in the long run, it's really going to hurt yourself, especially if you do not set stretch goals either. A profit plan is something very important. It's your business plan. It's going to gauge your overall performance, investments versus return on your investments. And our profit plan that we love to teach our traders and our students here is based off 10 trades. And basically what we do is we assist our investors how to generate profit off of 10 trades. Now, for example, I want to ask you this question because you really don't have a say-so right now what your profit plan is. We need to ask you a simple question. Out of 10 trades, how many trades are you winning right now? Are you winning 2 trades? Are you winning 3 trades? Are you winning 4 trades? Are you winning 5 trades? Don't try to impress me. Be real. If you're going to exaggerate it, it's only going to hurt yourself. Steve's going to win 4. Rox will win 7. Sydney will win 4. What else? Out of 10 trades, if you don't know, just say, hey, I don't know. This is the reality of trading. If you don't know but you're currently trading, you may want to audit yourself. Basically, take a look at your track record over the last 30 days to 90 days and pull your percentages. Okay, but let's just say you win 4. 4 trades you win, okay? Let's say you lose 6 trades. Now, novice investors or traders that just don't know, they will look at this and they'll say, hey, you're a pretty bad trader. You can only win 4 out of 6 trades. While educated traders would say, hey, that's actually a pretty decent track record. The only thing you got to be fighting with yourself is your emotions and your pride. But let's just say when you win trades, you win 50 pips per trade. 50 pips is your reward, and let's just say when you lose 25 pips. That's your risk. Okay, so when you win 4 trades, how much do you win? What's your gross win? 200. 200 pips. What's your gross loss? Gross negative is what? I'll bring out my calculator so I don't make any mistakes. 6 times 25. 150. Gross lose, 150 pips. Okay. Are you still making money, yes or no? Are you still making money, yes or no? Here's my question to you. Do you want to be in this business to trade, or do you want to be in this business to make money? If you want to be in this business to make money, take your pride out of the market. Because when you first start trading, more than likely this is going to be your reality. But I would like to first congratulate every one of you in this room to taking the steps on educating yourself, because when you educate yourself, something magical begins to happen. Watch what happens when you win 6 trades and you lose 4 trades, and this flips. You're going to win 300 pips when you win, gross, and you will lose 100 pips, which means your net goes from 50 pips to 200 pips. You 4 times your profits just by winning 2 more times. Okay, with the standard position, this would be an extra 2,000 US dollars. So here's my question. It usually takes like 2 weeks to place 10 trades trading this strategy. How many of you in this room would be pretty happy first starting out part-time making an extra $2,000 every 2 weeks? What if you did this an entire month, you placed 20 trades and you made an extra $4,000 a month? How many of you in this room will be pretty happy with what could you do with an extra $4,000 a month? Probably a whole lot, just an extra $4,000 a month cash. Okay, this strategy is doing that for a lot of investors because it follows a strict profit plan where logically and mathematically it makes sense and it generates income. Okay, so let's go ahead, excuse me, let's go ahead and now show you a way of analyzing the market to predict specific breakouts, okay? And for those of you, let's look at a simple one. I look at 4 currency pairs. For those of you who are wondering the best currency pairs to do this off of, write this down. I'll give you the 4 crossovers, the 5 crossovers. You get the pound yen, which is one of them, and these additional 4. These additional 4 are the Great British Pound US dollar. These are all 1-hour time frames, by the way. The second is the Great British Pound Canadian dollar. The third is the Great British Pound New Zealand dollar. And the fourth is the Great British Pound Australian dollar. Excuse me. Okay. These are the 4 and 5 with pound yen as well, historically produce amazing profits on a consistent basis. Rock says, Great British Pound, that's why it's better to live on the other side of the world to trade Forex. It's a little bit more convenient, that's for sure, but you know, at the end of the day, you could always just move to Hawaii. If you're making enough money, why not, you know? Or move to Australia. I heard Australia is pretty nice. I haven't personally been to Australia yet, but I've been to Hawaii. Hawaii's quite nice. Anyways, that's all personal preference. Be that as it may, let's take a look. Oh, Sharp brings a good point, New Zealand. Let's take a look at the Great British Pound New Zealand dollar. For those of you in this room, this is kind of a hit and miss. When you look at your broker platform, sometimes your spread would be like 8 pips plus. If you have a spread on the Great British Pound New Zealand dollar that's above 5 pips, you may want to call your broker and say, what the heck's going on? Because, you know, you're kind of getting, in my opinion, you got yourself a bad spread there. Spread should always be below 5 pips no matter what. Sometimes your broker will require you to deposit more money to get that, but hey, so be it. It pays off in the long run. Be that as it may, what I would like to do is begin to analyze these currency pairs and show you the technical way of predicting breakouts, and then we have 30 minutes, so we have enough time to probably get 1 or 2 of these currency pairs in. We'll start with the Great British Pound, New Zealand dollar, and the 1 hour time frame will be the last time frame we revisit. We're going to pull up what's called the monthly time frame right now. For those of you that do not do this, you may want to revisit and rethink looking at the larger time frames. Even if you don't trade off them, it's always, hands down, a good idea to find long-term direction. Because when it comes down to trading any market, you better believe the larger time frames will control the direction of the smaller time frames. And so here's my question to get started. For those of you who are actively trading, what do you see? For those of you who are not trading, try to guess. What do you see? Is this market going up? Is it going down? Is it going sideways? What is it doing? This is a spatial intelligence exercise. Lewis says it's consolidating. Okay. Now, more importantly, what strategy, technique, or what did he utilize to predict that? Chris says it's going down. Colin says it's going lower. Mark says I'm using convergences. Kishore says sideways. Gus says down. Okay. Let me show you what happens when we just bring in this. And appropriate levels of support and resistance. Would you agree? Since 2011, this market has been bouncing between the bottom blue level and the top blue level, created a false spike towards the south, but here we currently are. Would you agree, yes or no? This is a trading range. What's happened here is the Great British Pound and New Zealand dollar exchange rate has been trading between this bottom blue level and this top blue level, and every now and then it tries to break out of its range, like it tried to do up here 2 times and tried to do down here once, but it gets sucked right back in. You and I, we look at this and we get extremely happy because this is opportunity for us. It gives us an overall ability and idea to find overall direction. So this is about 1,848 pips. 1,848 pips of market movement. Trading a standard position, which is only a $2,000 US investment. This is about 18,000 for about 18,480 US dollars return. Now, before anyone jumps down my throat, I understand this is a 1 month time frame. It's taken about 6 to 9 months average to go from one side to another. But let me ask you this question. In 1 year, if you took $2,000 and you made $18,000 off your $2,000 investment in 1 year, would you consider that a good return on that investment? In 1 year, you take $2,000 and you generate just shy of $20,000. Yeah, it's very good percentage-wise. Maybe not living-wise. You can't buy, a Ferrari or anything with $18,000, but hey, that's a good return. Think about compounding, reinvesting, setting yourself up for the following year. Be that as it may, I just want to point that out. The monthly time frame lets us know long-term we are sideways. But because it is a monthly time frame, we're going to have to recognize the here and now movement. We can't recognize the downward movement yet until we have a downward signal. And one of the things we are going to look at is this blue line right here. It's 1 month of trading. What this means is we had 1 month, the market touched this level and rallied. A second month, the market touched this level and rallied. A third month and a fourth month. Does everybody see how when this market approaches and touches this angle, the market goes up? Now, because the Forex market's a pretty honest market, it does the same things over and over and over again. So here's my question. Is this market touching this angle right now, yes or no? So one of two things is going to take place here. And the reason why I want to pull up the pound New Zealand dollar, because honestly, it's providing simple direction, and it's going to pay us either way, going up or going down. If this market decides to close below, now granted, it has to close, so we have to wait till the end of the month. We have, what, 20 more days left, 21 more days left before the end. But if this closes below this blue line, there's really nothing left to hold it up, and so therefore, we should expect an 837 pip move, which would be equivalent to 8,370 US dollars, probably before the end of the year. That's not too bad of a $2,000 investment to make $8,000 in just 5 months. One position, not even including the re-entry possibilities. Be that as it may, but this move only happens if it closes below, or has a high percentage chance of happening if it closes below. So we have 21 days. Until the 21 days is up, you need to be thinking up. We need to be thinking buy. We need to be thinking buying the pound New Zealand dollar, because look what happened in the middle of the month for the last 4 months. Market rallied, market rallied, market rallied, market rallied. If it wants to do the same thing it has been doing for the last 4 months, this could be a good opportunity to begin to start buying the market. So because of that, what we will do is we'll turn to a smaller time frame of a daily time frame before we bring up the 1 hour time frame. We'll pull up the pound New Zealand dollar daily, and we'll utilize our evidence from that market or that time frame to predict what we're going to do next. So let's go ahead and make blank charts. I always love teaching off of blank charts, no indicators, no systems. I love it, especially with you, the investor, because you can do this with just basic indicators. You don't need fancy, crazy things. You need Fibonacci's. That's the only thing you really, truly need, Fibonacci's. Be that as it may, what you have to understand is this. The top chart represents 1 month of trading. The bottom chart represents 1 day of trading. The larger time frames will always control the direction of the smaller time frames. The daily time frame, what do you see? The bottom chart represents the day. What do you see? Do you see a bullish trend? Do you see a bearish trend? Do you see consolidation? Do you see both? What do you see? And what strategy did you use to identify it? Kashar says, I see bullish movement. What did you use to identify your bullish movement? If you're saying, I don't know, then really pay attention, because maybe we can help you with your spatial intelligence. Kashar says, I used a trend line. Chris says up. But Chris, what did you utilize to identify that? Here, with the pound New Zealand dollar, I see 2 things. I see consolidation, 2 levels of consolidation. Look how this market was sideways, bouncing between support and resistance, and all of a sudden it's like someone took a hammer and popped this market up and created a second level of consolidation. Same range, pretty much same price points, but we went sideways, bumped up, sideways again. Okay, consolidation is when the market creates equal highs and equal lows between a similar area. Usually this happens because either 2 things, not enough buyers, not enough sellers to push it in one single direction, or countries keep their currency pairs within an exchange rate to promote exports and imports. But here's my question. According to the consolidation, is this market expected to go up, or is it expected to go down from the consolidation range? Hits the bottom level, it should go up to the top level, right? Chris says up, Kashar says up. Perfect, perfect, perfect. So right away, we're beginning to think through ourselves going up. That's a very logical, straightforward methodology. Now, what we have to do is we have to identify these wave patterns. If you do not know Fibonacci's, this is probably going to go way over your head, but this is going to be good for you to see the overall power of it. Fibonacci's will identify highs and lows, and we use them every day, and we teach our students to use them every day because they work. We're going to identify the first low with 1, 2 candlesticks to the left, 1, 2 candlesticks to the right, higher than the center wick low, followed by a proper high of 1, 2 candlesticks to the left and 1, 2 candlesticks to the right, lower than the center wick high. This will give us our up AB boundary. When you have an AB boundary, we spread Fibonacci's between the A and the B, and this will give us our equation. Now, Fibonacci's are wonderful. They're great. They let you know whether the market's in a retracement or an extension. Basically, As this market moves, the market's going to move in waves. There's really no arguing in regards to that. If this market wants to go up, it's going to make higher highs and higher lows. Okay, it says that I am on mute. Can everybody hear my voice? Can you hear my voice? Okay, everyone can hear my voice. Perfect. So I might be on your side, my friend. Okay, so this retracement lets you know that as long, you write this down, this is going to be a good thing for you. As long as the market does not take out the A, the market has no choice but to go your way. That's extremely important to understand. As long as the market does not take out the A, the market has no choice but to go your way, which means after the B has been established, any downward movement you see is short term. Now, I can't really get involved inside the act. I'm going to give you a quick overview of Fibonacci's, but it's not going to give us justice. And I know some of you it's going to go over your head, but that's okay because I want to give you the overall direction. I think that's more important than anything else. Between the A and the B boundary, you have Fibonacci retracements. Above the B, you have the extensions. We've color-coded this to where orange goes to orange, green goes to green, blue goes to blue. Basically, if the market forms a low within a specific color area, then you expect the market to form a high the opposite color area. Let me show you what I mean. This market begins to form a low at the 618, which basically means we will continue to buy this market until it touches the orange 1.618. What you have to envision and imagine is saying, I'm only going to look to buy this market. I'm only going to buy. I'm only going to buy. I'm only going to buy. And maintain that buying status until the market touches the 1.618. Even when the market retraces, you have to say, this is a short-term retracement. This is a short-term retracement. This is a short-term retracement until the market. Now, here's my question. Did this market touch my green level of the 1.618 extension, yes or no? What this does gives you such a tremendous, hands-down competitive edge over the market. This is how bank traders trade. This is how fund managers trade and professionals trade. Why do we know this? We've been training traders for over 20 years. We've trained over 30,000 clients worldwide, and we trained our fair share of bank traders, fund managers, and professional investors, and this is how they do it. Because where you buy in, because eventually the market will go your way, and that's how these guys get these huge returns on their investments, because they know when to hold and they know when to close. Because as long as the market doesn't take out the A, it has no choice but to go your way, and watch what happens. The market forms a high at our extension of the 1.618. So we'll move our AB boundaries. C becomes A, D becomes B, and Fibonacci's are going to be brought to the new up AB boundary. We'll also spread a trend line in our AB boundary like so. Okay. Question. Here's the A. Has this market taken out the A? Yes or no? Has the market taken out this A? Has the market come down and penetrated this bottom blue level? Bashar says no. Steve says no. Colin says no. Paul says no. So, according to this strategy, this downward movement is a short-lived. This is a short-term move, and eventually the market will U-turn and go up. Okay? If you can understand that, then what ends up happening is when this market touches this upward trend line, finds support, finds support, finds support, you can buy this market. You can buy the market at the candlestick formation. Watch what happens. Rallies up. And this market forms a high higher than this high. And here we currently are. So here's the deal. You may know this as head and shoulders. We know them as crown formations. Is it agreeable that this market is hitting or approaching the upward trend line and the angle in which caused the market to rally 1, 2, 3 different occasions? Yes or no? Question number 2. Did the market form a high higher than these highs? Question number 3, if you know about crowns or head and shoulders, is the market and the ideal location to form the right tip of the crown or the right shoulder, if you know it as that? Look, everyone, this is saying there is a high percentage chance that the market's going to go up. So therefore, when we turn to the smaller time frames, do you think we should be buying this market, or do you think we should be looking to sell this market? Buy. Steve says buy. Kashar says buy. Kenny says buy. Guy says buy. Mark says buy. Does this logically make sense? Is this beginning to create a trading plan? Plan your trade, then trade your plan. Now we bring up the pound New Zealand dollar, 1 hour time frame, and I want to ask you this question. Between 2 a.m. Eastern time and 5 a.m. Eastern time, the market forms a high or a low of the day. In your professional opinion, or amateur opinion, or novice opinion, from what you've just seen, should this market be forming a low or a high at 3 o'clock tomorrow? Kashar says low. Steve says low. I completely, hands down, 1,000% agree with you. So between 2 a.m. and 5 a.m., I'm going to look for the low of the day. And tomorrow, when we set up for that trading opportunity, we're going to look to generate around 500 US dollars. How many of you think this was pretty simple to do? Or if you learned this, how many of you think that this would increase your winning percentage? Perfect. Okay. Let me show you this to you. I got about 15 minutes. Let me show you another currency pair with lower spreads, because I think that's important that you have something that you can apply for tomorrow. Let's do the pound US dollar. And then what's really neat about what I do here at Market Traders Institute, I trade live with real money and a real trading account with standard positions, sometimes up to 10 standard lots or $100 a pip. I do it live in front of you, the students. I show you how this is done. I help you control your emotions, and we create what's called the profit plan, trading plan, business plan, which catapults usually success. I'm going to show you student testimonials. So I'm going to show you this. When I'm done with this, anyone who wants to learn what it will take to get inside one of those mentorship programs, I'll show you at the end. So be that as it may, here's the Great British Pound US dollar 1 hour time frame. And remember, for those of you that just joined us, this is your takeaway. And for those of you that just fell in love with this strategy, write this down if you haven't done so already. I'm going to do it one last time. I'm running out of time here. Between 2 a.m. and 5 a.m., the market will form historically a high or low of the day. And of that high or low of the day, the opposite high or low of the day will form between 8 a.m. Eastern Time and 5 a.m. 8 a.m. Eastern Time and 2 p.m. Eastern Time. There's a lot of fundamental announcements that end up taking place during the U.S. session that has a lot of influence in regards to when the high or low will form. It's just naturally how it happens. But in the morning, it's really easy because all the transactions take place. The goal is to generate 50 pips a day. That's it. Write this down. I'm going to show you in the smaller time frames. Really simple. The highs and lows that form. Okay. So once again, this is all consolidation. This is one big consolidation mess. A lot of this has to do because the Great British Pound US dollar is at an all-time high and hasn't made a decision. I shouldn't say all-time high, but it's been in like a high since 2008, and it really hasn't made a decision if it wants to keep going or not. And so we're waiting for the breakout to occur. But let's just make this real simple. Yes or no? Is this 2 a.m. Eastern Time associated with the low of the day in the rally? Okay, let's take a look at the previous day. Here's the 26th. Is this the low of the day? 3 a.m. Eastern Time, and then the rally? Here's the 25th. Is this 3 a.m. Eastern Time? Is this the low of the day? Here's the 24th. Is this 3 a.m. Eastern Time, the high of the day? Isn't this cool? Isn't this neat? Isn't this worth trading? Here's 2 a.m., the high of the day. Here's this 4 a.m. Eastern Time, the high of the day, 6:20, day after day after day after day after day after day. I know I'm beating a dead horse here, but I really, really, really want to make sure that you guys understand that there's opportunity to be made tomorrow. This is your takeaway. You can do this tomorrow. You can do this. Okay, so let me show you how we trade it here in Market Traders Institute. I'll show you a couple more examples, then I'll show you how to get involved. Now you can join this and you can watch me and participate with me doing this live. You know, it's neat. Students are making a ton of money. They really are. Okay, so and I'll teach you Fibonacci, support, resistance, and provide you my trading picks and so on and so forth. Anyways, let's keep going. Here's 3 a.m. Eastern Time. Takeaway, how many pips above this high are we going to look to buy? How many pips above this high are we going to look to buy? Where's our entry buy? 10 pips. Write this down if you don't have it now. Above our 3 a.m. high, 58.68. Plus 10 pips above entry buy. If you don't want to write it down, you're not writing down fast enough, pull out your phone, pull out your camera, take a picture of this, and then you can look at it again on the screen. How many pips below is your sell? 5 pips below. 746.41. Minus 5 pips below, entry, sell. Okay. Now you wait. Did the market cross over the sell? This is now an activated trade, and now you are in a market sell, so therefore you're short. First thing you do, cancel the opposite buy order. Then you place your stop. How many pips above the 3 a.m. candlestick? 5. 58. 63. Stop. Plus 5 pips above is their stop. What's your reward? How many pips is your reward? 50 pips reward. If you're answering all these questions, hey, you can do this tomorrow. You have the currency pairs. You can rock and roll in the morning. 1.6991. And if you don't want to rock and roll in the morning, that's fine. But at least do yourself a favor and check this back. Go back 5, 10 years from now. This has been working for almost 20 years. This works. Okay, here's the risk. 22 pips. How many of you would be willing to risk $220 to make 500 US dollars? Let's see what happens. Market falls down. Makes lower lows, lower highs, lower lows, lower highs. Some say yes, some say no. All depends on your risk versus reward. The biggest takeaway is you want to make sure that you are saying yes to something and no to something. Did we generate 50 pips? Okay, I'll show you one last example, and then I'll show you how to come do this with me. This high is 3 a.m., 24th. Place your buy 10 pips above, 31.41. Plus 10 pips above. Entry, buy. How many pips below? 5 below. 20, 15. Negative 5 pips below. Entry, sell. Entry orders are pending orders. You're making a requirement for the market to actually cross over. Did the market cross over and activate this into a market sell? Yes. First thing you do, cancel your stop, or cancel your opposite buy. Second thing you do, place your stop 5 pips above your 3 a.m. high, 31.36. Plus 5 pips, stop. Okay, last thing you do, set a limit, 50 pips. 6966. Plus 50 pip reward. Risk. Look at the risk. 22 pip risk. Reward 50 pips. Is my reward larger than my risk? Yes or no? Is this a good equity management trade? At the end of the day, equity management will allow you and will separate you from the great traders versus the okay traders. Every candlestick represents 1 hour. 1, 2, 3, 4, 5, 6, 7, 8. 8 hours, we made $500 US. In this 8 hours, you did not do any manual labor. In this 8 hours, you got to do whatever you want. Most of you probably would have been sleeping. Most of you probably would have been to the gym. Most of you probably were eating. And while you're doing this, you're generating income. Happen to me if you think you can do this. Happen to me if you think you can have fun doing this. Happen to me if you think this could only increase and benefit your trading. Okay, what I would like to do in this room is I would like to show you how to get involved in a training session and a mentoring session with me. So take a look at your screen. Imagine having the opportunity to experience live webinars and presentations where you're learning from an experienced trader who has days like this. Here are stats from a similar session where we made 964 pips from the trades placed on that day, then we took our big profits just 11 days later. That's $9,861 US. Here are individuals and students just like you who got involved and learned the strategy just like this, and this is what they're saying. Thomas S. is a pastor from Ontario. He made $4,500 US his first week. Anthony S. says, I would say about a month after I started, I saw a return on my investment. An average month of trading, I'm making around 3,000 pips. With a standard position, that's $30,000 US. Here's Peter C. Peter C. says, I did Josh's Great British Pound Australian Dollar, and it took me right to the limit. It was good for 80 pips. That's $800 US. FX Caddy says, I've struggled for several months, but my rep got me focused, and then I made 575 pips in 2 weeks. What would you do with an extra $5,750 US in 2 weeks? Here's FX MPX. 144 pips provides a snapshot to his trading account. The last 24 hours, 96 pips this morning alone. Would an extra $960 US this morning alone make a huge difference for you? Ladies and gentlemen, I host live training sessions for everyone in this room. My education specialist just posted in the chat box a link to where you can begin to find out more information. But in one single day, we're able to generate over $8,800 US utilizing a skill like this. What I would like to do is break down my live market Forex mentorship and empowerment program and give you all the details of what you receive if you take action. Okay, twice a month we have 2 live market online Forex sessions per month. This is a value $1,997 US. And these bi-monthly live market online sessions you will learn directly from me, a well-known trader, about how you could potentially mimic my Forex success. You're going to understand how to avoid making costly mistakes. You're going to learn how past history repeats future profit potential, discover ROI boosting strategies to accelerate your trading account, and you're going to be able to pick my brain in a Q&A session. Once a week, you're going to receive Forex Market preview videos. What this is I literally analyze the live market, just like how I did today, but I provide you the highest winning percentage trading opportunities across the board. You receive a video, and inside that video, you'll be able to watch and be provided the highest winning percentage directions, entry, stops, and limits, and which I'm thinking for the week. Now, you will also receive recorded replays plus ongoing access to me, a professional trader. In my opinion, that's priceless. Each of these sessions will be recorded, so even if you can't attend live, you will be able to extract the knowledge and strategies as I discuss them. The recorded replays will be available 24 to 48 hours after the session ends. And the live market webinar and preview videos, not only will I show you my winning trading techniques, but I'll also highlight common mistakes that you may already be avoiding. But that is not all you'll be receiving today. You're going to receive 4 special fast action bonuses just for getting started today. Fast action bonus number 1, 30 days free of Market Traders Institute's VIP Analyst on Demand. That's a great service. I used to participate directly in that service, and Market Traders Institute is the education that taught me. Bonus number 2 is the Introduction to Currency Trading. 4 Forex lessons by Market Traders Institute, $797 US value. Bonus number 3 is the Profit Plan Consultation Call. In my opinion, that is priceless, but it is a value $595 US. Bonus number 4 is the 10 Keys to Successful Forex Trading ebook by Joshua Martinez with a $20 US value. The Live Market Forex Mentorship and Empowerment Program is a combined value of $5,403 US. Normally, it costs our students $297 US a month to participate in this program. But you're not going to be paying that today. As a special thank you to TradingPub for giving us the opportunity to be here with you, and a special thank you to you for giving me the opportunity to show this to you, your risk-free investment of $297 US will not be $297 US. Our TradingPub special will just be $27 US. For 30 days introductory price to spend with me trading, receiving my top picks, and being able to duplicate this. One training session alone could generate upwards of 200 pips. We actually did that this last training session, 178 pips in US dollars. Risk-free investment. Ladies and gentlemen, go ahead and click on the link for those of you that want to get started. Literally for $27, look, it's really not that big of an investment, especially for the bang that you're getting over a $5,000 US return on your investment. Look, we also will give you a 30-day money-back satisfaction guarantee. If you're unsatisfied after experiencing Live Market Forex Mentorship Empowerment Program, then simply contact us. Within 30 days, the Market Traders Institute will cancel your membership and provide you with a full refund of this special introductory offer. Look, if you're not satisfied with this, we're not going to argue with you. We don't want any bad blood over this. We'll give you back. We're not going to spill blood over $27. But look what you're getting for $27. It's incredible. 2 live market online Forex sessions per month. That's a $2,000 value by itself. 1 Forex market preview video each week. That's a $1,000 value by itself. Recorded replays plus ongoing access to me. Talk about the ultimate confirmation. 4 fast action bonuses. 30 days free of Market Traders Institute's VIP Analyst on Demand. Did you know that's a 24-hour service? Monday through Friday, we analyze the Forex market and provide you the highest winning percentage opportunities. Talk about trades on demand. You log into that room, and we'll give you the highest winning percentage on the days. And if you have, talk about the ultimate confirmation, if you want a trade to analyze, we'll do it for you. Not a problem, because we want to serve you. Bonus number 2, Introduction to Currency Trading. 4 Forex lessons by Market Traders Institute. They taught me how to trade. Imagine what they can do with you. Bonus number 3, Profit Plan Consultation Call. That's a big thing. That's your road to success. That is your business plan. Bonus number 4 is the 10 Keys to Successful Forex Trading ebook by Joshua Martinez. A combined value of $5,403. Normal price is only $297 US per month. But as a special thank you to TradingPub, anyone who gets involved will get in a TradingPub special of just $27 US. Ladies and gentlemen, I want to say thank you to each and every one of you for giving us